Welcome to my YouTube channel, Phil's Gang YouTube channel. My name is Phil Grande. Okay, we're going to start where we left off last week, where we were talking about the big tech stocks. The big tech stocks, a handful, about 6 of them. You know them all: Facebook, Google, Amazon, Netflix, Apple, Microsoft. They've been driving for 13 years, especially since 2013, the 500 S&P. That's been the fuel. They've been driving all 500 stocks. Why? Because they have been printing money like crazy since 2008, and to buy treasuries to keep interest rates at zero. What's that mean? Well, yields go down to zero. When yields drop on treasuries, that normally tells a big signal, sends everybody a signal that the economy is getting worse. But they've been able to overcome that because when the yields go down, that's an environment for these 6 stocks to thrive, which pushes up the S&P. And they've been able to fool people, the fake business news network, and saying, oh, look how great the economy is doing. Just look at the stock market. They should have told them the truth. Look, the stock market only reflects what is happening now, today. The stock market is forward-looking. And when the yields are coming down, that's telling you the economy is getting worse, not better. But they left that out. That's how they've been driving this stock market. And when the market collapsed, our biggest enemy, and who's the biggest enemy? I'm going to show you right now. Our biggest enemy is the Federal Reserve, right? They print all the money to buy all these treasuries, to drop all these yields. And what they did is flooded the system with money and then lied to everybody in saying that they were going to take care of the economy by printing all this money. And it was a bold-faced lie. Listen to this. It didn't take care of the economy. It saved the banks, but destroyed the economy.
The immediate objective of saving the banking system was achieved, but the broader objective, which was helping the economy recover quickly in a robust way, in a way with shared prosperity, total failure.
But it didn't look like failure because why? Why didn't it look like failure? Because remember what's going on. The market since 2008 been going straight up based on low yields. That's the environment that the tech stocks love to push the whole market up. Now listen to this.
The tools of the Fed worked through the Wall Street banks, and in so doing, were disproportionately benefiting the wrong people.
That's right. Exactly what happened. So this Fed right here is the enemy. And the Fed, the biggest problem for the Fed is there are a bunch of the fake business news networks lies. And they tell you, oh, boy, they're printing all this money for Main Street. And everything's going to be okay. No, when they buy those treasuries and the more these yields drop, the more the inflation goes up, the more it goes up, the more it destroys the Main Street, the folks, because remember, their asset is one. What's that? Jobs. And because none of the money is going into the what we call CapEx, business investment, remember, the CEO should be taking all this money, this low rate, putting it into machinery and equipment. And that way you can produce more as an employee. When you produce more, you get paid more. You get paid more, you save more. You save more, your retirement gets better. You spend more when your wages go up. Spending is 72% of our economic GDP growth. None of that was happening. None of that was happening because Main Street didn't get the money. It was Wall Street who got the money. So the more the market went up, the more that the value of everybody's dollar on Main Street went down. So the point right now is, well, when's the market going to crash? Well, it's going to crash when the guys on Main Street have to make a decision. They got to sit with their wife and say, honey, we can't pay our car payment, our mortgage, our student loans, our credit cards. Something's got to go. The minute that they have to make that choice, that's when the market crashes. And remember what the evidence is. I just showed you a moment ago. The evidence is, remember, this Federal Reserve, they can keep all printing all the money they want, but they can't keep destroying Main Street forever through inflation without the consequences. And the consequences are right here. The big tech stocks, because the big tech stocks thrive on all of this printed money, low interest rates. In fact, if you remember when the market dropped in February of 2020, it wasn't because of the COVID, okay? Because everything was freezing up. The banks were freezing up. They started to freeze up in 2019. The shadow banks that were freezing up. The junk bond market was freezing up. So to get it unfroze, what did they do? They decided to go in and print even more money, right? Even more money, and flooded the market.
Federal Reserve lent $500 billion to securities dealers, $500 billion to foreign central banks, bought $2 trillion of treasury securities, another $1 trillion of mortgage-backed securities. It flooded the zone.
It flooded the zone. Well, they talk about flooding the zone right here after a crash, flooded the zone. And now our pattern is looking the same as the pattern right here before the crash. So that's where we are. So right now, the big thing is to remember, look at your cues, because the only thing that drives this entire stock market is big tech stocks. And if they can't hold this 365, not only hold it, but get above it, and get above it with big volume. We need big volume, more than average volume. This thing's got to break out like this, break out with big volume. If that doesn't happen, it is over. And that means that the market will then start to collapse. So that's it, gang. So the bottom line is you're being lied to every day by the fake business news network. And remember, they keep lying and they say, oh, it's not our Fed policies. It's not our Fed policy destroying this economy. This is what they tell you. It's not what are they talking about? Here, listen.
Well, I reject the thesis. I actually don't think it's been the Fed's monetary policy that has led to these vulnerabilities. I think it's been incomplete regulatory policy.
He said, well, the reason why the markets are going down in 2008 and they went down in February 2020 because of regulatory policies. What a bold-faced lie. Regulatory policies. You know how many regulatory policies they had? 240 new ones. He's a liar. That's cash and carry. He's a liar. So bottom line is, watch your tech stocks through the eyes of the Q. We're going to pick up on this next week. In the meantime, please hit like, please share this with everybody, and please subscribe and check out my gang free for 10 days. philsgang.com. Sign up for the Working Investor Group. See you on the charts.